Welcome back to Trading 360. I'm Nicole Petalides, live in New York City. Thanks for being with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. And Ben Lechtenstein will take us through the charts as he always does. And here to take us through the trades is Mike Shorr, Director of Trading Education at Prosper Trading Academy. Great to see you both on this Monday. Thanks for being with us. So the first one here, Mike, that you have is BE, Bloom Energy. Tell us a little bit why this one's on your radar.
All right, so they have earnings coming up here, and I think there's a pretty good chance that it runs up into earnings. But on top of that, you have it broke out really nice. Now we're kind of seeing it consolidate a little bit, but I think that going into earnings, if it's anything like it's done in the past, it should rally up into earnings. So this might be an earnings play or a pre-run into earnings and exit before. Obviously, if you have some decent profit in that, I would take some money, if not all of it, off the table before that.
Right. I know you're watching the 200-day moving average, too. Ben, you're taking a look at the chart here of Bloom Energy. Tell us a little bit about it.
Yeah, I'm watching a little bit of a consolidation pattern that's playing out here as we're forming a bit of a triangle on the daily, but taking out some key resistance as of recent and the recent pop that we've seen. The 5-minute time frame, I think, is a good place to begin. The move that we saw, and again, ticker symbol BE, well, much like the broader market over the last couple of weeks, we've seen some trajectory to the upside, but the last few days here you can see from 15 up to 22. Now, this was just part of the bigger picture move that we've seen off the May low. That was down around 1147. Here you can see a bit of a double bottom that actually formed there, and I mentioned that trend line that we just broke out of, coming off those highs from November of last year. We topped out in April up around that $26 level, and here you can see again an attempt with this gap higher and this move up here to get something going here above that on the daily time frame. Now, I wanted to look at the weekly time frame here and just kind of zoom out a little bit, because we were just talking again about the move from November lower and how we're breaking out of that most recent kind of trend lower. But if you take another step back, here's the week, you can show that the trend taking into that high from, well, we're going back to February of last year, around 45 into consideration, and then the November highs that we were just talking about a minute ago up around this 36 level. You can see that, well, we're still a ways from that trend line. As I mentioned, kind of this consolidation, this triangular sort of pennant type formations forming. So not a real good lean one way or the other. Definitely seeing conviction on the 5-minute time frame on the daily. Again, this big move up here, but you can see still some hurdles to get up above.
Right, understood. But, you know, you do have those, I guess you're coming up on the bottom, off the top, but I think that chart really tells the story. So, Mike, what are you thinking as far as how to make this trade?
So this one, it is a bullish trade. So what I'm doing is I'm buying a call spread and selling a put spread. So that means that your total outlay is going to be very, very small. Like with us being down a little bit today, we might be able to do this for close to even money. So think about it as financing your long call spread with the sale of a put spread, both of them being long deltas. So if you get into that for even, then you can lose $1 on your put spread. The strikes that I'm doing is the 18.19 on the put side, and then the 21.23. So we actually have $2 of possible return on the bottom, and then buying it, and then you have $1 risk on your put spread that you sold. So potentially you could make $2 risking only $1. You know, actually, if you pay a little bit of money for this, that's fine too. But it's a bullish call going into earnings.
Right, understood. Okay, what do you think of that, Ben, when you hear that trade?
Well, you know what I was looking for, as Mike mentioned all of that, is that 200-day moving average that he has his eye on. So I pulled it up here on the chart. It's a blue line. You can see, as Mike mentioned, a test of and how we're right at that closely watched level. One thing I've been watching in terms of these individual names is how they're faring versus the broader market. So last week, for example, we saw the S&Ps, the NASDAQ, the Dow, the Russell closing up above their 50-day moving average. Where things stand in terms of these closely watched moving averages, and as I think about it, those four majors I just mentioned, while ticker symbol BE, right up to that longer term. Again, this is the 200-day moving average in the blue line here. The ES, the NASDAQ, the Dow, the Russell, nowhere near that closely watched level. So this one's leading in many ways.
Yeah, and I see that as you're showing that the analysts are along with you, Mike, on this one, a little more bullish. Some buys and overweights from JP Morgan, and I see some of the targets on a couple of them in the 20s. So, you know, I guess that's a good thing here, as I just saw the JP Morgan is 29 with an overweight. So Let's move on and go to the next one, looking at CF Industries in the world of chemicals. Right now it's been trading around 92, 96. Mike, what are your thoughts on CF Industries?
Yeah, so this is an earnings play. So they've done actually quite well on earnings, and so I'm just looking for a bullish play into earnings, taking advantage of that higher implied volatility in the shorter dated option, and it models out really, really well. And just in general, I continue to like the sector. I think that it kind of almost a neutral beta to the downside and a positive beta to the upside. So I really like CF here.
Right, understood. Okay, what do you think, Ben?
I think that CF will, much like the broader market, and as we just looked at in terms of ticker symbol BE, has seen a nice rally over the last week or so, but I think it's at a really critical point where it could go one way or the other. I don't have a real lean on this one, but I think it's not going to be long, as Mike mentioned, with earnings headed our way, that we'll have some answers pretty quickly, pretty soon. Let's begin with the more granular 5-minute time frame, the rally up, as I mentioned, that we've seen with the broader market rallying. This is what you want to see. Again, 85 up to 97, a little bit of sideways consolidation. What concerns me is, are we starting to roll over right now, or are we just pausing? Let's take a look at the daily, and I'll show you exactly what I've got my eye on. 5 areas of migration of value to the upside. If you're looking at the lower extreme now being 80 and the upper extreme being this 113 area, you can see the consolidations areas that have formed, and each one of them higher and higher. So again, working assumption that we're trending higher, intact if you're looking at this as kind of one large area of consolidation. But I think that there's also argument to be had that we'll possibly be forming 2 areas. That one that we just had noted in the prior chart is all is 5. What if this is balance area number 6? I think I say again that we'll know pretty soon, because we're kind of at this critical juncture here right now around this 100 level. If we were to get up above it, I think it's supportive of the bullish scenario. Again, this kind of being one larger area through the middle, I always say opens up a door for a retest to the upper extreme. But if we fail here at the middle, this 100 area, and start to roll back over, guys, I think that we could be in a bit of a bearish scenario where we've actually started to form value at a lower and lower level. Now, again, as long as we're above 69.70, I think that's key in terms of the longer term trend here, but not what the bulls want to see if we actually are, again, forming a new area of value at a lower level. So let's consider 100 pivotal in terms of earnings, and I think that's going to be the next lean one way or the other, above or below that.
Oh, okay. And as you have the, either way, I was just reading the either way commentary, because on the one hand, you have some concerns that the conditions could remain soft for this type of company, but at the same time, that the manufacturer, which it is, of hydrogen and nitrogen products will benefit from a nitrogen price rebound in the second half of the year. So that's something bullish for you, Mike.
Yeah, absolutely. And so this one is the technicals do flow into it, but with it being an earnings play, you obviously have to look at the sector in general, and then also, what its performance has been over the past 8 quarters. And it's just a really good reward to risk. And actually, I'm highlighting that same level that Ben talked about, that 100. This is the 100 call calendar. So, perfect that if we just go right there and sit, that's about the best place it can go.
Okay. And last but not least, there's the Las Vegas Sands. Tell us about this one, Mike.
Yeah, so this one is more technical. There is a little bit of overlay that there is big exposure for LVS out of China. And we've seen China having lots of problems economically. We're seeing relationship, let's call it strained, between the U.S. with Pelosi's flying in there tomorrow and speaking with the Taiwanese on Wednesday. And we're seeing stuff about BABA delisting and things like that. All of that, BABA delisting has nothing to do with LVS, other than that it puts a lot of economic strain on that whole Chinese sector. So on a technical basis, we're seeing some resistance where it looks like it's failing there. And so I'm not saying that it's just going to go down in a binary sense. I'm saying that let's fade that upside move and then have some room to the downside. And that's what I'm doing here with a delta bearish iron condor. So I'm selling an at the money call spread and then selling a further out of the money put spread.
Okay, understood. And we've seen such a great move for the stock just this month as we just talked about the reopening of Macau. Ben?
Yeah, and today as well, up about 0.4%. So trying to shrug off some of the weight that it had been feeling as of recent, which we'll get into in just a minute when we look at the daily. But here you can see on the more granular time frame over the last couple of weeks, again, we were talking about the broader market rallying. This is what you want to see individual shares doing when that happens. If not, it's kind of like spidey senses should be tingling, or there's a flag flying at the very least, and you should be trying to figure out why your stock or individual stocks aren't performing as well as the broader market. But here you can see again, LVS, a nice move up here. We're talking from the $30 level all the way up to $39.40 almost. And again, as mentioned here, we're up about 0.4%. This is a look at the 5-minute time frame in just the last couple of weeks. But I do want to point out that we are kind of losing some of that momentum to the upside, just a bit of a grind lower here. And when you look at the daily time frame, you can see that that's kind of part of the bigger picture trend that we have been seeing. These rallies that have come into play have been short-lived, limited in terms of follow-through, and if anything, we're trending lower here right now, kind of consolidating above 28, 29, below this $50 level. Those are the highs we saw back in February of last year, but basically trading the same levels that we were at this time last year. So not a lot of movement one way or the other as investors kind of try and grapple with what's been playing out here as far as everything that's going on in China and some of the political events that are potentially going to take place in the near future. What would that mean for longer term shareholders? Speaking of longer term shareholders, I want to just point out, I mean, when you look at this, it hasn't really provided a lot of return over the long haul. We're going all the way back to 2005 here. Basically, we're looking at a price around the $50, $51 level before running up into the $150 highs that we saw. The crash down to 136. Now, it fared pretty well amidst the pandemic. Here you can see how support that they've seen 2011, 2015 was retested around the $30 level, 32, but it held. Now, a recent breach of here, and again, just kind of struggling to get anything going with any real momentum to the upside. It just seems that investors don't have much to cheer about in terms of LVS here as right now, trading current levels, but slightly higher on the day.
Right, as you said, though, right, in this downtrend and just trying to do some consolidation here and find some footing. Final thoughts on this name, Mike, with your trade?
Yeah, it's a perfect consolidated trade. That's exactly what I'm looking at. So we have to go and take out these recent highs for us to get hurt on the call side of this, and then we give ourselves enough room if it does fail to profit on a small down move. Of course, if we continue down big time, then we run into trouble, but I give ourselves a little bit of wiggle room on this one.
Right. Any big picture thoughts here, Mike? We have the S&P rising, yields are coming down. We're starting a new month after the best month of the year. Mike, what's your big picture here?
Big picture. I think that we are a bit more into the buy the dip thing, where before it was like catch the falling knife. So I do think that that we do have some solid footing. We've been shrugging off a lot of neutral to even bearish news. We've been shrugging it off. So I think things were overdone to the downside. I don't necessarily think that we're just going to go rocket up and make new 52-week highs anytime soon. But I think that you do have to entertain both sides of the trade, in this market, and be a little bit more confident in picking the numbers, the names that you like on these pullbacks to major support areas with some amount of confidence, where before you were just kind of closing your eyes and hoping.
Right, and as we got in, we saw slow growth at the factories. The new orders have dipped, right? They've been falling. Your big picture, Ben?
Guys, Mike mentioned the buy the dip scenario, which is kind of coming back into fashion a bit as of recent. Completely different than what we had been seeing, which was more kind of sell the rip. But yeah, it does seem like we moved from that falling knife type scenario and a little bit more calm amongst the market. The VIX hanging out around the 23, 24, 25 area, I think a reflection of that. But until we get up above the June highs, up around 4,200 in the S&Ps, I think all of this is still somewhat characteristic of what we've seen since the beginning of January.
Yeah, good to see you both. A nice new start here.
Yeah,
thank you,
fun.
Mike Shorr. Prosper Trading Academy, Ben Lichtenstein, right here on the TD Ameritrade Network. You can catch him on the future show. Thank you both very, very much.